Okay, guys, good afternoon, good evening to you guys. Thank you for being here today in this live webinar, Live Geometric Market Outlook. And today is the 2nd of March 2017. Okay, and thank you for joining. And we will be on the live market environment. But before anything else, let me just share with you guys the risk warning here. Okay, very quickly. Forex and CFDs are leverage products and involve a high level of risk and can result in the loss of all your invested capital. Therefore, Forex and CFDs may not be suitable for all investors. You should not risk more than you are prepared to lose. Before deciding to trade, please ensure you understand the risk involved and take into account your level of experience. Seek independent advice if necessary. That's it. So let's get going into the trend side of things. Now, I just want to share a little bit about this bar chart, barchart.com on the Forex market, Forex heat map or market map. You can see that you've got on the left here, you can always look at it this way. You've got the USD, GBP, Euro, the three strongest currencies, and then you've got the AUD, JPY, and CAD or CHF, let's say the longest bar, to be the three weakest currency. Okay, so you can always just go into your Forex market map or even the currency strength meter here. So you can actually see that they've got a little bit of commonality whereby the AUD, excuse me, JPY, the NZD and CHF especially are on the weakest side of things. So they're the weakest in terms of its strength, and you've got the GBP basically being the highest one or the strongest. Okay, then you've got the USD second. But in the livecharts.co.uk, I find that usually look for the single bar, only the single rate bar like this to be the weakest one, and then the highest bar to be the strongest, and that's all you can see, and then you can always match that up with what you see here. Okay, so the GBP here, basically it's still the strongest one, not the strongest, but here is it's just right beside USD. So USD, just to let you guys know, it is still reflected as the strongest currencies on all aspects, including the USD index as well. So the USD index is quite a good indicator of the US dollar. It is compared to a basket of 6 currencies. The USD index is not a tradable instrument. It may be available on your MT4 platform, and it's either DXY, if I'm not mistaken, or the US index, USIND, or something like that. It depends on the abbreviations used on your platform. Okay, we've got various for the USD index. So if the USD index is showing that it's bullish, and you've got bullish patterns to support that, and you've got bullish fundamentals, then you are looking at USD in general, looking into bullishness, and vice versa. Okay, so here we have got that showing us bullishness on the USD, so that hence the reason you've got that there. And when you go on to here, you could see that equally it's on the strong side as well. Okay, but you've got this 1, 2, 3, 4 on the downside, AUD, JPY, CHF, and NZD. Okay, and when we go on to the zero hedge, this one here is one of my favorite. You go on to zero hedge talking Forex, or you can just type zero hedge talking Forex onto the onto your Google onto Google, sorry, and then you could see that all these news comes up here. For example, you've got one that just come up here. It says AUD starting to give a little as USD bulls seek alternative routes. Okay, so that, what does that mean? That may actually mean that the bulls are switching, or they're correcting, or there may be various reasons for it. But we want to always look at what's going on. Now, just to let you guys know, before going on to the chart and talk about what goes on in the chart, what chart patterns, the last speech, Congress speech by Trump, didn't really give the exact numbers of the tax cuts, didn't really give out specific information, so that actually blurred the market sentiments and didn't really give any sort of strong bullish sentiment at all. Okay, hence the reason they didn't give a bullish sentiment, because the numbers were not clear. He was going on and on with generic stuff. So that's not seen as bullish. That is seen between uncertainty and a little bit of fear seeping in or creeping in to the market this moment of time. But when we are looking at the DJIA, now the Dow Jones, as you can see, again, we'll go back to clock angles and the excuse me, exponential moving averages. You can actually then see that you've got a very strong angle to the 12 o'clock-ish type. And you look at the three EMAs. So three EMAs that I use are the 50, 100, and 200 exponential moving averages. As you can see, prices are well above all three lines, as you can see. So this is still giving loads and loads of bullishness. Now, this bullishness is also going on to US dollar combined with many other pairs, and it is giving loads of bullish sentiment. I think I've mentioned this before in the past. We have the reason for this is because Trump is, despite all the mess that he's causing, a lot of people may not like him, or there's a lot of things that are not appropriate that he talks about, but at the end of the day, again, he brings investors in because he is actually promising a lot of things that may be good for investors. So the cash flow, if it is coming in, investors coming in, then you've got cash flow that would actually then rise up the dollar and causes rate hike possibility to happen as well, which is coming in March, and also interest rate going up, whereby the dollar value would go up too. Okay, so that is basically what's happening. Now let's look into the USD JPY, just to cover a little bit about the USD JPY. We have got still very strong uptrend. It is to the 12 o'clock-ish angle, as you can see right here, all the way up here. Okay, well, you know this Z pattern that had happened in the past, but here we're looking at the movement now, and here itself there may be a possibility of a Z pattern forming, which actually gives me an idea that this upward move from B, this may be B, C may actually happen much more longer, a longer way to reach the C level, whereby this may be your A right here. So you've got your A, B, and B to C is giving us a bit of an opportunity to the upside. So the USD JPY is also hinting or hinted by the USD index to be bullish. Okay, so of course, you know, there's no such thing as a straight line, so you will see up and down, but the direction is to the upside. The other thing as well is very important is to look at the clock angle and to compare at least 3 time frames to look into an idea of what the trend may be. Okay, so here, for example, we're looking at an angle, very nice. We're looking at the candlesticks are above all 3 moving averages as well, which is a very good sign of bullishness. Now, when we compare that to the 4-hour chart, we can see that that build-up is actually still happening. We still have got that support happening there on the 200, and then price got pushed up again. So here, giving us again some more bullishness for the USD JPY, and it's the same goes for the USD JPY on the daily chart. Now we have got all these candles that show a lot of strength. We've got all these candles are longish, bullish candles that go above all 3 lines, and that is definitely a sign of bullishness. As it goes upwards, you have got this area here and this area here as a resistance, but it is showing the price of 114.33. Now 0.33, last 2 digit, has gone above the 20 psychological number, which is really good. It's giving you the ability to understand that it has gone into a bullish type territory past the psychological number. Okay, but the one that you need to look at in terms of price action is the next psychological number upwards, okay, which is 114.50. That's right. So some of you guys got it already. Some of you guys understand that the psychological numbers are really important. They are used to understand where the reversal can take place. They are actually used as well to enter correctly and exit correctly. So the next level up is 114.50. As it goes above 114.50, then it gives you more bullishness to the upside. So you would need to wait for prices to go above and above and above 114.60 or 114.80 and above, then you have got more bullish momentum. Usually what happens is that if at all prices were to reverse, it usually could reverse potentially, okay, very close in within 10 pips of the 50 area. So you want to be very careful. Let's say you are already buying now. An ideal area to exit the trade will be 10 pips before it reach 50. And then you re-enter the trade again at 114.60 and above. That is usually the way we would deal with psychological numbers. Okay, so in other words, I'll repeat again, if you are already buying at this moment of time, you want to make sure you are exiting before your price reaches 50, at least 10 pips before, which is 114.40 and below would be an ideal place to either take profit, exit, or really consider entering or not at the time, because it is a bit too late to enter at the time because you've got a potential risk. Now this is the capital risk with a capital R. You need to really understand. Okay, it's not the trademark symbol here, it is the risk symbol for me here onto the chart, onto trading. Now risk element can actually be cut by at least 50% if you apply psychological numbers. Okay, so here if you want to actually then sell, you need to always sell under the 50. If you want to buy, always buy above the 50, at least 10 pips above to buy or 10 pips below to sell. Okay, that's using the principles of psychological numbers. So here let us look into whether or not we could zoom out. We already know that the trend wise, okay, T, okay, doesn't what do you call that, stand for trademark. The T part would be your trend, okay, the R would be your risk. Really important areas. So let's start with the trend first. Okay, are we clear about the trend? Now trend wise, of course, as I have mentioned, hinted by the USD index, hinted by what's going on in the news and data and everything else, it's positive and it's got loads of room to the upside. Okay, so let's look at whether we have got any bullish type pattern going on. Okay, this is what we want. When we look into sentiments to be bullish, then we want to look at bullish pattern. Here we have got the push up of price. So let's just go on to lower time frames. We are now clear that the 1 hour, 4 hour and daily gives us the hint of an upside momentum for the USD JPY. Okay, so here very clearly seen from the 5 minutes onwards, very clear upward momentum at this moment of time. What we need to look out for is prices. Okay, as you can see, prices is just heading upwards, but we've got a 114.50 to look out for, so be careful on that side of things. Now here, let me just clarify what I meant by the Z pattern. The potential for the Z pattern is this: we have got a potential A to B like this, and we've got a potential B to C like that before it comes down. Okay, before it comes down somewhere. All right, now that somewhere up there is still C point somewhere, and the reason the way to actually determine is by pulling your Fibonacci from A to B and look at the levels that the ratios are based on these ones here. Now we've got one last line that may have a potential that says that it might usually reverse in any one of these lines here, the 200, the 224, 224 or 2.24%, or the 261.8%. Okay, but the thing is that if it goes beyond and beyond, that means that Z pattern has failed and has just got more room to the upside. But usually what happens is, because this is a Z pattern and it's a bullish pattern, it might go up there, it reverses around there, and then it comes down to meet the D area here, and then the D area has got a potential to go upwards. Okay, so here let's just mark that. Now we are talking about just potential. We need to look into price going above 50, okay, and above 60 at least, to find a potential area up here, okay, which is at the 80 areas, 114.80 area. That's exactly on the dot, 114.80, 114.90. Now 114.80, 80 is another psychological number. Okay, so I wouldn't take that much of a risk to just wait until it goes and take profit there. I would rather look into the reversal and then take your selling or your correction if you wish, and take it only after it has actually gone down to this level here to take a buy. Because what usually happens in a bullish Z pattern is you got a pattern like this, exactly like that, for example. Yeah, that's your A, that's your B, this is your C, and then your D. Usually the AB's length is similar to C to D. And once it goes down from C to D, it usually comes in the form of an ABCD, a bearish ABCD. Okay, so here it might go up there, but when it comes down, it will make a sort of ABCD to reach to the D area before it goes up. Okay, so this is just a route plan that might possibly happen. Now, I just want to show you another example so you get an idea of what it's like trading this Z-like pattern. It has been really good to me for the last couple of years. Trading the Z-like pattern has been really, I would say, good performance has been got out of trading the Z-like pattern, but you need to have criteria. Now, all the criteria on how you do it step by step and what kind of Fibonacci are all complete in videos in the members area of fxgeometry.com. The fxgeometry.com website will soon complete, and when I say soon, I know I've been saying soon for many times, but this time the soon is within a week to a week and a half, because we're literally, as we speak, inserting all the content at this moment of time, so it wouldn't take that long anymore. Now, when we look into the Z-like pattern, it's classified under advanced type pattern. Okay, so let's look into AUD USD for now, so that we are still fresh into looking at what we meant about this Z-like pattern. Now, here, for example, this was something like what I have forecasted for prices to go above this area to be a better area to complete the Z pattern, but prices looks like it just wants to come down or got driven downwards. I think I've got some questions here. Good day, Donatus. How are you doing? Okay, can you actually hear me, Donatus? Let me just type in again, okay? I'll type to everyone just so that, but everyone could hear me, I guess. So let me just confirm that. Okay. It says that it's not speaking, Donatus. Let's just check again. It must be at your end, because everything is, it looks like it's good here at this moment of time. Okay, so we have got the AUD USD. So now what's happening now is that Z pattern, instead of going up to that area, it's trying to correct now at this area. Okay, it's trying to find its way downward. So that downward move, it may actually be driven by bearish sentiments in Australia economy or politics or something like that. Okay, so some data has not been good, but be careful, because here usually at this level from C to D, it'll make that ABCD shape down. So you might see this candle coming down, makes a correction up, and then come down to D, and D is where the area that it might actually pop back up again. Now here it might find support at either one of the level as well here. Okay, that's why I like using the 200, the 100, and the 50 moving averages, because they not only help you mark the trend or look into the direction, but they also help you understand how prices are respecting these three lines and might find support. So here very quickly, prices, yes, on the daily chart, AUD USD is going downwards, but it might find support very soon. How did I know that? Because you are looking at either one of the three lines, and one of it is a 50 exponential moving average. It's just too close, so it might go through it, but there may be a possibility or a risk for it to bounce up or go back up and bounce off from that 50 exponential moving average. So this is hence the reason it's really important for us to always look at where the three moving averages are on different time frames. Okay, so let's look at what's going on in terms of trend. At this moment of time, it's not that clear in terms of trend on the daily chart, mainly because yes, it's on the way down, but it's touching the three lines. It's not way above, traveling upwards above three lines, or way under, traveling under all three lines. This is not happening for the AUD USD at this moment of time. So there may be some sort of uncertainty just creeping in at this moment of time in terms of direction on the daily chart, okay, for the AUD USD. But for the 1 hour chart, it's very clear to the downside. Okay, on the 1 hour chart, it's just showing that it's got loads of room potentially to look into downward momentum. As you go into the 4 hour chart, it's just past that 3 lines and going under as well. But when you go onto the 5 minutes, for example, you've got way under, very strong again, 15 minutes, and then the 30 minutes, all the most candles are way down on a 6 o'clock angle going downward. So when you look at your time frames, you look at it like you're putting brick by brick to make a house, and you look into the 5 minutes, it's showing downtrend as it picks up, and then you look into 4 hours, just beginning that downtrend again, and as you look into the daily chart, it's just weakening again. So what this shows is that it's probably best for you to look into shorter term and take the opportunity to the downside for the Australian dollar. But then this is where we want to look into whether or not you've got patterns, you've got the C point reaching or finding the bounce at the 3 moving averages. Let me just check whether we have got. Hi there, Eugene. Okay. You are not sure of targets, Eugene. You're talking about the AUD USD, yeah, on the 15 minutes chart that we are looking at. Now, in terms of target, let me just clarify one thing. The first step always is looking to the trend, yeah. When you are sure about the trend, then you could see the pattern, okay, the pattern, yeah. The pattern, if the trend is to the upside, then you want to look at upside pattern like that. If it is on the downside, then you want to look for pattern like that downward. So this is bullish ABCD and bearish ABCD. So here, let's look at, if you want to look at targets, for example, if it is an if it is a downtrend for AUD USD, let's say, and majority of time frames showing you downtrend, then you want to look at a potential pattern like this. That's your A, that's your B, that's your C, and that's your D. Okay, so your target will be your D area. Now, when you want to trade, let's just look into whether or not we can spot anything that may give us a bit of an example. If you go to the 1 hour chart, okay, let's look at it like this, or perhaps 4 hours, or even daily. There's just no clear ABCD at this moment that you could actually see it not only clearly, but with the AB and the CD equal in length, because you see you've got huge moves here, finding correction. Let's say you can easily say, okay, I have seen an A from here all the way B here, and then it has corrected itself, and then zoom downwards. Okay, that's a good observation, but in terms of risk, again, capital R, okay, depends on your C point. If your C point hits on the dot on either one, have found the resistance on the dot of either one of the 3 lines, you've got a better or lower risk level, okay? And you've got higher probability level. At this stage, even though it's just went past, didn't actually bounce off from any one of the 3 lines, it may still work. Now let's just prove that, okay? So let's look into this one. Let's zoom in, let's say, okay? Let's say you're looking at this pattern, and you're pulling your Fibonacci, your area from somewhere. Let's say you're looking at A here, B, and then C, and then all the way down. Let's say you've looked at the price for AUD USD way before all these things have actually happened. So let's say you have looked into this one here. This was your A at one point, let's say, okay? And then you have got your B to C right there. And then you pull your AB equals CD, and you want to find it right there. Let's say it's like that, okay? Or you want to take your A from here, B, and then C. You can do that. But the problem with this is that the C, none of the C's, when you draw your ABCD, it's really touching the 3 EMAs. When it does touch a 3 EMA on the dot, you've got a better potential, you've got a higher probability and lower risk. Okay, I hope that is actually clear, because this is very important, and it's actually one of the how do you call that, criteria that makes your pattern higher in probability. Okay, so this is why we need to understand what that is. Now let's go to USD CHF for a minute, and let's understand the what you call that. I want to emphasize on the C point. Now let's say we are looking at A from here, B there, and now C is here. Okay, and then you are projecting D. You don't actually know D could go how high, right? But I like this one very much. I like to see this kind of pattern because the C point just on the dot of either one of the three lines, it found support at either one of the three lines, and I like that because it increases my probability. Okay, so here we have got a chance of a upward momentum. Of course, USD is seen to be strong, CHF may be weaker than USD, so we have got an opportunity of an ABCD to the upside. But let's start drawing that so that you get a clear idea. Okay, brilliant, Eugene. I appreciate that. Thank you. If you understand that part of it, you know, it's a big part where it would actually save you a lot of trouble. The C point as well, and the trend. Okay, you want to, because your trend, understanding the trend and knowing where the C point is, both relates to the risk element. So my focus has always been and always will be the risk first. Okay, before anything else. So here, for example, let's zoom in a little bit, and let's say we find now a potential A, B, C, D. You're clear with the trend. You've looked into the due diligence of everything else and checklisted, and then you say, this is the pattern I wish to draw. So I wish to trade this pattern, and I want an ABCD bullish pattern to be traded. So let's say we are drawing this now, A to B, okay, B to C right there. Double click your C to D right there. So you're projecting your D, and you're looking into this area here. Now that area on the 1 hour chart gives you the potential of prices reaching the take profit area of 1.0180s area. Okay, so here again we can get excited to know that we've got an opportunity, but do not get overly excited, because we need to then measure your risk based on price action. The price that you are given based on AB equals CD gives you 1.0181. 81, the last two digits of that price there, based on 4 decimals, is 81. 81 is very close to the 80 side number. And 80 side number, if it gives you that side number, you need to take profit or exit 10 pips below the 80. So 1.0170 would be your ideal take profit zone. So let's say 1.0170 would be your ideal take profit area. Okay, this is based on principles of psychological numbers. Okay, you can tweak it as much as you want, whether it's 10 pips before psychological number or under the 10 pips, under 10 pips of the 80, or 5 pips on the 80. That's entirely up to you. For me personally, I like or prefer 10 pips below. So that would be an ideal, let's say an example of an ideal take profit area based on psychological numbers. Okay, so where do we then end, let's say, or your trading area, your ideal trading area will then be from converting the ABCD pattern into a geometric pattern by attaching A to B. Okay, and then we have got the center point or the centroid that is marked right there. For example, in this case here, it marked the 1.0094 area. Okay, so 0090 is still a good buying area because it's above 80, but for those who want to be quite conservative, then you want to look into the 1.0100 area. Okay, 1.0100. okay, now 1.0100 area is the next psychological level. So if you want to trade and do a buy on it, then you need to trade 10 pips above the 00, which gives you 110 instead. Okay, so you've got 110 right there. So that would be an ideal area, for example, for me to enter, or to trade based on the principles of psychological numbers. So you've got that room there. Now it has already passed that. Okay, it's already gone at 0132. So let's say you've already entered at 0110. You probably already made that profit, and you are looking into take profiting or exiting at 0170 area. So that's your window. That's your window now from this point of 0130s onwards to actually trade and look into 170 area. So that's quite a significant area. Okay, and for those of you guys who have learned or looked into the trade idea that I've shared with you coming from banks yesterday, they have got a 0160, if I'm not mistaken, to be the area of target. So you've got some room there as well. Okay, and it is actually quite a significant, nice one. And look at how it found support at the 200 moving average. It could be at the 100, it could be at the 50, but just finding support at that area of either one of the EMA gives you a higher probability. So you have mixed the trend sentiment with the risk element, okay, and the pattern element. So then you get to mix that up and heighten your probability. Now, another way to actually lower your risk is to look into not just one level here. You need to use your Fibonacci to look for another take profit area. So what we do next is we take that from A and we try to determine where C has actually found support on which closest Fibonacci ratio. That gives me the 50% area right there, okay, for the C. So what I do next is I pull my Fibonacci, and usually if your C point retraces at 50%, the potential zone that it will target based on the ABCD pattern is your 200%. So when you pull Fibonacci from B to C, then you are looking at your 200 moving average as another potential take profit area. Okay, so this is just the zone. Now, in order for you to lower your risk further, you wouldn't actually then think of this zone 1.0191 and take profit there. You want to always make that a zone, but you want to take profit before price reaches or gone into this zone. Okay, and then you tweak that psychological number like what we have, and we tweak it to 1.0170, and that is your price, not that zone there anymore, because you need to do tweaking. When you do the tweaking of the zone and the price based on psychological numbers or principles, then you are lowering your risk and you're increasing your probability. Okay, so that is your USD CHF, guys. Let's look into what's going on with gold. Okay, so gold, this is what's going on the big picture. This is what I have drawn from the past couple of weeks ago, and I think probably almost 2 weeks now. And this is what we have drawn ever since. I've not touched the chart. I've left it as where it is. It was predicted or forecasted to reach this blue area and make that reverse down. It is happening right now. It has reversed just at the dot of that zone area there. I thought it would actually gone higher right up there, but again, it's too soon to actually even say that. It might find a corrective move here and then boom, go up again. That corrective move, if it comes down again, it gives you an ABCD to the upside as well. Okay, so nothing is just have actually ended, so there may actually still be some more room to the downside to find support. When you want to look at how far down it has actually gone to or may go to, then you want to always look at the price now and look at where has it gone up in the past before. It's actually gone up around there, okay, to find support. Do they have any other support area? You need to look back and you need to always look this way. So you've got prices there, there's a support area there, there's some more support area there, and do you have more significant support as well? The answer to that is yes, you've got some more here. So hence the reason you want to be careful and look at maybe, just maybe, it might find support again at the areas that it has found support in the past. So I think I've got some questions here. Yes, we can, Sashi. We will look into the GBP JPY as well. Okay, right after the gold. So here we've got gold on the daily chart, but what's happening on the 15 minutes or the shorter time frames? Now here itself, let's just first of all, it's probably best for us to look into a clearer chart like this. Here on the daily chart, it's just flirting now, begin or would begin to flirt with the 3 EMAs. It's heading downwards there. Now, what this actually means is it may actually find support. It needs to go through all 3 lines to give us more downward momentum. At this stage, based on the daily chart, it's just too soon to know that, okay, it's a downtrend now. It's just too soon to do that because it may just be a bit of a correction. Okay, so here, this is what we need to be very, very careful. And we go into the 4-hour chart, let's say, as an example, and we can see that it has actually gone through the first 50 moving average, and now it's trading in uncertain territory on the 4-hour chart. Okay, and maybe the best place to start is to restart. So what we do is we clear off everything here, okay, and we start from scratch. At the 1-hour chart, we look into the basics. We start from the basics and we look into that angle. We look into that angle, and prices, yes, it is in the falling side of things, okay. It is actually falling in terms of the value of gold prices downwards, but as it falls, you need to look to the left. Look to the left and look at whether or not you have got significant support area that might then make that resistance, that fall, a supportive fall, meaning it will be supported somewhere very soon. Has it got any very significant support? We have got one coming very, very soon that has pushed prices all the way up. So you need to also look at that zone, because you see, we want to look at, always look to your left, scroll to the left and draw your support resistance zone. Okay, in this case here, because we have got that body there and you've got the longest tail right there, you've got a support area. Prices have been pushed up before in the past for gold on the 4-hour chart. As we go on the left again and again, you've got some resistance there. We've got long candles going through or pierce through, and that is a good sign as well. You need to look at whether you've got loads of support, loads of resistance, and also long candles piercing through. If these criteria are met, that means you have drawn that support resistance correctly. Okay, so here when we go back, for example, you can find you've got some more support, very close support, you've got all these long candles piercing through as well. As we go to price now, you can see that you've got some resistance as well, and a couple of things has been going on. Okay, so we just need prices now to go under 1234 and below. Okay, 1234 and below then give more room, but the problem with that is it's just trading in between these 3 lines, and I don't like that when that happens. Okay, it needs to go under all 3 lines or above all 3 lines. This is on the 4-hour chart. Okay, so here we want to clear this up first. Okay, and as we move to the 1-hour chart, what's going on? It's just giving you that downward momentum, but very far off on the monthly chart. Weekly chart, it's got a lot of unpredictability, okay, a lot of uncertainty, sorry. Then you go into the daily chart, again, it's just found support. So we'll forget about the weekly and the monthly, the far end. The daily is giving you some form of support possibility coming through. Let's go into the 4-hour chart. On the 4-hour chart, it's gone into uncertainty again, and then you go onto the 1-hour chart, it's gone downward. So I'll forget 4-hour, daily, weekly, and monthly for now because they just don't actually match. What if I go onto the 30 minutes chart? As I go to the 30 minutes chart, 15 minutes chart, I find that it's clearer to the downside, okay? And it's not clear to the long term. So there is some downside momentum or room to sell at this moment of time, okay, for the gold, okay? But if we go into the daily chart, and with the W-like pattern, usually, if you pull your C to D, how far prices could come down to based on this pattern is usually between the 50% as well as the 61% to find the support. Okay, it might find support either at this area at 1,222.37 or 1211 area. So that's your window of where it might go down to. All right, now If it is at the 1,222, it's exactly at the 100 moving average. So you need to understand that it might find support at either one of these lines. Okay, so the soonest line that it might find support, if it does want to, if it feels like finding support, there would be your 200 moving average, and that would be the area here. Okay, that's price close to the 1232.30 area. Okay, so here it's just finding that momentum. So if we just forget all this uncertainty that's going on, and we'll just take all that out again. Okay, and now concentrate on 5 minutes, let's say. You could see that you've got more room to the downside. As you can see, 5 minutes as well, you want to see whether you've got potential ABCD to the downside. Okay, you've got an A there, yes, you've got a B, you've got a C, oh yes, there's some more room to the downside. But again, if you are thinking and paying a lot of attention to risk, you don't want to get overly excited with an ABCD with a C that has not actually met or found resistance exactly at either one of the three lines, because that is a very good criteria to measure your risk, is only to pick patterns. But we've got lots of traders who would like to pick any kind of ABCD that looks like a great ABCD. Okay, looking like a great ABCD visually is actually going to be increasing your risk. If you want to measure the risk, you need to understand many things that has got to do with price action. You need to also look at, for me, number one criteria is for the C point to really find resistance like this. At least it pokes one of the line and comes downwards, then you've got it. But I'm not saying this ABCD might not work. You may have this ABCD right here, okay, working perfectly well, but that is entirely your choice of whether you would like to trade this ABCD or not, or you would like to be more conservative because you are measuring your risk. This is entirely depending on yourself. For me personally, I like this pattern. I would have traded it, but I would prefer to trade it if at all this C point touches one of these lines, especially if it touched the 200 moving average on the dot. Then I've got a very good probability level and a low risk level. So here it may have some more room to the downside. As we can see, is giving a lot of downward momentum for the gold at this moment of time, and we're talking about the 5 minute chart only there. Now as we go on to the 30 minutes chart, you can see that ABCD is still intact. Okay, and yes, it may appear that it's closer to the 3 moving averages, but it still has not touched for me. Okay, and if you go onto the 1 hour chart, again you see that very nicely. So there is a possibility of this happening. Okay, now I just want to keep you aware on it. Okay, even though you see the ABCD downwards and things like that, if I take that one away, now as a pattern trader, I need to look at what are the other possible patterns. There may be a possible pattern like that, and if you got an X here, you've got your A here, B here, C here, D here, somewhere here, then this might then give you a hint to the upside once it reaches the D area here. So again, that is another possibility. You've got an ABCD happening right there, right now, potentially, but again, you want to look at this area here as your area that it might find support. When you look left, you can see that there's potential support here, correct? And this support area may be an area that you need to look out for. This may be your zone of where prices might bounce up. When you marry the support resistance area itself with the M pattern, it makes sense that it might go up around that area there. So you want to be very, very careful. And you see that this is what have actually happened because you've got a rejection candle now. You've got a bearish rejection candle happening with a very long tail or long needle down. That means it couldn't find more reasons to pull prices down. That's why it's left with a skeleton of the candlestick now. So there may be a reason why. So even though if it has stopped there, that if you look to the left has got so many areas of support, some more support, some more support. So you see it's hinting some potential upward move for the short term. Okay, so this is important for you guys to realize and notice. Okay, so that's basically it on the gold for the 1 hour chart, giving you a bit of a hint. Any questions at all for gold at this stage on shorter, medium, or daily chart? Okay, for me personally, it may actually bring you a little bit to the downside. It all depends. I mean, for you guys who are trading gold, you need to pay a lot of attention to the dollar strength. The dollar strength. Let me repeat that. The dollar strength, the economy in the US, because gold don't go up and down. Actually, the reality of it is gold don't go up and go down, and gold is not a commodity. Okay, this is actually the truth of the matter. But a lot of people, a lot of traders, I mean, the world outside there has actually treated gold as a commodity. But actually, gold is closer to money than it is commodity. Okay, and at this stage, it depends a lot on the value of the dollar. At this stage, the dollar supply is getting less and less. Actually, there are less dollars circulating. Okay, there is some trouble around the world, so hence the reason it is being pushed up a lot. Okay, that's why you're looking at the dollar going up. Okay, let's see, we've got some questions. Okay, no problem, Marius. Okay, let's look into GBP JPY. Okay, for Sashi and the rest of you guys. So let's look at what's going on with GBP JPY. Okay, we want to always start as usual with a trend. Okay, let's look at the pattern that has been actually drawn some time ago, but the target got hit there. Okay, and it may actually be a failed pattern or so, but for those who have actually left that trade and take different view of different type patterns, let's say for example like this one here, let me just clear off everything first. Okay, now here itself we want to always look at the trend, number one. Okay, and from the trend we look into the pattern that would coincide with the trend. Now let's just start very quickly, very easily with the 1 hour chart. With the 1 hour chart, as you zoom in a little bit, you could see that you have got some resistance there. Now that resistance has been breached, so you've got some momentum to the upside suddenly. Okay, do we find support at either one of the three EMAs? Yes. Okay, and what is the angle of the clock? Look at this angle coming downwards. That angle that you see, let's say the most recent move from, we can take it from there, you can take it from there, it doesn't matter, all the way here. Okay, that is a 4 o'clock type angle. It's not strong downtrend. If a 5 o'clock angle or 6 o'clock angle, you can say that the trend is getting stronger and stronger to the downside. But this is not really happening for GBP JPY on the 1 hour chart. We see that you've got higher lows as well. You can see that prices have actually bounced up from either one of the lines, and it has gone above now the three lines. So we may have a hint that the prices, the trend is picking up to the upside. Okay, there is a bit of a hint of bullishness perhaps. So let's look at strength of the candle. What is happening with the candle itself? Okay, now look at this move up. As it goes up from this point to this point, you could see that the correction, the number of sellers has reduced, but the number of buyers have increased. You've got one candle down, but again you've got 3 candles up. And then now you got this one candle down again, and it has found support around there and it's trying to go up. So it looks like because you've got higher lows as well, and more, the correction is getting weaker on from the bears, but you've got more push from the bulls. There may be a possibility at this moment of time to look into more bullishness. Okay, but what is the threat? What is the risk for it not to come down now? Is to look to the left. When you look to your left, you could see to the left it has actually gone down. Price been pushed down before here, very close, very close to the 200 moving average. So what you do next is you use that area there with the highest body and the highest tail you can see in that family of candles to draw a zone. So that is your resistance type zone based on this move here. Now when you draw that, coincidentally that actually happened. So you are looking at bearishness or correction at this moment coming downwards for the GBP. Overall trend to the upside, but at this moment of time, there may be a potential correction. When do you see that bull or that bullishness pick up? Only after it goes above 140.72 and above. But there is another risk. Even if it goes higher than 140.72, as it goes higher, it will meet with the side number of 140.80. Okay, so only above 80 towards 90 and above that you can see more bullish momentum. If not, it will get challenged by this resistance to come downwards. But as it comes downwards, you've got 3 moving average again for it to find support potentially. So what is the conclusion? It's a very risky time to trade or have your trade open for GBP JPY at this stage because the price is not yet right. 140.45 now, it's gone under the 50, but you need it to go under 40 and go under all 3 lines. At this stage, it's just trapped between psychological numbers and too close to the 3 moving averages, and it might just go inside, go pierce through the 3 moving averages and give you more uncertainty. So in terms of timing, not really very nice, but here it's best for you guys to find the trend strength of the trend in various aspects. Here technically you can see that it is peaking out, it's trying to push price up. What do you see in the 4-hour chart? In the 4-hour chart, you don't actually see that so much. It's got more uncertainty. It's tried to, but it found resistance or it's just not strong enough to go up at this moment of time for GBP JPY. On the daily chart, it's still under. It's also, I think here, it's also finding uncertainty. So let's just not focus a lot on 4-hour, 1-hour, 4-hour, or daily to give you the trend. What do you see on the 5-minute chart? On the 5-minute chart, a bit of correction at this moment of time. On the 15-minute chart, what do you see? You see corrective move there, pushed prices upwards. You may see some short term. So now it is correcting itself to the upside. There's some bullish momentum as a corrective move, but it may be pulling prices downwards. So here you may see some more potential. Now this may be a potential idea for you to know how far prices could go. Now here could be a very nice A, B, C, D, because the C has found support at either one of these EMA lines. So let's say if I pull all the way up here, okay, very quickly, just to get an idea whether you've got a bit more room, if at all you've got a bit of a bullishness, and then you pull that up there, you see that it's got a bit of a room to go up to the 14080 area. But again, prices start coming down at this tip here, which is 140.73, at this body here, which is 140.62. So you see it's coming downwards. It is going under the side number of 80, okay, and it has actually gone under the side number of 50. So this is giving me more room to think that the sellers may be winning the game much more here as time progresses, okay, from short term. So let's look into this here. All right. Oh, we've got a couple of questions here now. We're looking at GBP JPY now. We've covered that for Sashi. I've looked into gold. Michael, USD ZAR, yeah, for the 4-hour chart. We'll look into USD ZAR in a minute, Michael. That's quite an interesting one to look at as well, and that's on the 4-hour. And for Eugene, you would like to look into the FIB level for GBP USD to make sure that it's 61.8. Fibonacci drawn from there. Okay, let's look into that as well on the GBP USD, okay, and see what's going on with GBP USD and the 61.8 FIB level. But maybe you want to let me know as well, Eugene, on what time frame that is on the GBP USD please. And Vincent would like to know onto the CAD JPY. Okay, that's probably a good one to follow up on what we have shared as well as of last week, and also Euro CAD. Okay, Vincent, thank you for that one. And this is CAD JPY. Okay, and then we have got UG as well for GBP USD. Okay. Okay. All right, let's take that one at a time. Let's finish this one first on GBP JPY. Give me a second, guys. All right, so hopefully this is clear, because as we went on to the here, for example, you've got CAD sellers. This news just came up, if I'm not mistaken. Let's just click onto the F5 just to refresh. Here itself, it's looking at sellers for CAD ahead of 13400. USD CAD will have been encouraged by the latest GDP states. Okay, it's talking about a couple of things here on the news side of things. Okay, it is hard to see the CAD gaining any real traction on the upside, so it is giving you the hint that the CAD may be looking into the downside. Okay, at this moment of time. But what do we see in the trend? As we have previously said, you have got the USD, the GBP, and the CAD to the upside, but then you've got the CAD at third place here. So it is obviously moving downwards at this moment of time. Here, for example, we have got, if we click on the F5, in terms of trend, we can still see that strong build-up of trend to the upside of the USD. CAD still remains weak, but the weakest of all other three, AUD, the JPY, and the CHF. Okay, so this one here, and the USD is still gaining a lot of traction to the upside. So with that in mind, let's look into what's going on. The GBP JPY, before we move on to GBP USD, USD ZAR, and CAD JPY, I just want to finish this one here. It is still looking like it's giving more momentum to the downside. It's just being blocked, price being blocked to go up further. There's a wall here between 140.80 area to 140.50 area maybe. Okay, so that wall, you need to go above that wall to give you more to the upside. So some of you guys perhaps looking into pattern and looking into this pattern here, for example. Okay, you've got A here, B here, okay, C upwards. Now this is what traders make a lot of mistake. Look at the C point. C point's just not really hitting any one of the moving averages, so the probability of it is lowered and the risk is heightened. So you've got a heightened risk there when you straight away want to look at a trend. You need the trend to tell you that it is really a strong trend. Okay, but here your argument would be this area here. Now this area here, as you can see, as I've mentioned, it's already giving you, it has sort of finished at that area, and hence the reason you've got more room to the downside. So as we go into the 4 hour on the 1 hour chart, it's still happening that way, but you've got the risk there. Now this is not a pair I would trade, whether it's a buy or a sell. I've got biasness to the downside on shorter time frame. On the longer term, I'm a little bit uncertain because the market's uncertain. The reason why I say market's uncertain is because if you look into 4 hour and daily, prices are not very clearly under all three lines or above. They're still within the three lines. It gives you a lot of hint of uncertainty. So it's not a pair that I would be very excited to actually trade, because there are other pairs that would offer you more clarity of direction, okay, and lowering your risk and heightening your probability. Okay, let's move on from GBP JPY to USD ZAR. Okay, so here, for example, let's just drag the USD ZAR. Okay, I know I've not gone blind, but sometimes you can actually get that. It's probably best if, you know, if MT4 has got this search thing up there and you just type it in and then it just pops up. That would be even better. Okay, so here we want to look into, let's say, the neutral time frame. I call the 1 hour time frame as a neutral time frame that you can always start doing things with a 1 hour chart first. Okay, here we find that it's got this, corrective move here after this big uptrend here. But then now it's picking up again. It's gone above all three lines. As you go into the 4 hour chart, you find uncertainty going inside the three lines, but then on the higher time frame, you are finding from daily onwards right down to monthly to the long term, you are looking at more bearish momentum from USD. Okay, but again, this is like months ahead. Okay, weeks to months and months ahead. So let's look into lower time frame and build it as a brick. Okay, so 5 minutes, we look at support. This is quite a nice one here. Okay, it's found support at the 100 moving average being pushed upwards, and that's the 5 minutes chart. As we go into the 15 minutes chart, we find that momentum to the upside again. So you can fairly say that to the short term, USD is still proving itself to go up and up and up. Okay, as you go onto the 30 minutes chart, what do you get? You get again more move to the upside. So you've got 5 minutes to 30 minutes now showing you bullishness to the upside. And again, it's the same story at 1 hour chart until you reach the 4 hour chart. So 4 hour chart, forget about it. Daily, forget about it. Weekly and all that, forget about it. Just operate looking at 5 minutes to 1 hour. Okay, and look at whether or not you could find opportunities there and whether or not you've got that upward momentum. In this case, yes, you've got many potential A, B, C, D, which is entirely up to you to trade or not. But for me personally, I find it risky to find no C point or yeah, especially the C point finding support either one of the line. Okay, that's one of my criteria to actually trade, just so that I can measure my risk well. Okay, here, for example, very clearly, many traders would just take that trade quickly, trading patterns going A, B, B, C, and then boom, it's definitely going to go up. Now, there's no definite in there because this is how it is. I mean, I find no definite answers to trading, but you've got probability. The probability will only go up much more if you find a C point here meeting one of these three EMA lines, and only then you've got a better probability to the upside. At this stage, you need to look at prices going upwards, yes, but you've got resistance there. As you look left, you've got concentration of resistance, concentration of resistance, concentration of resistance, which then build you a zone to look out for that price might just come downwards again. Okay, so here we are looking at uncertainty, but to the short term, you've got some room, but I can't tell you exactly what is that window of that room until you look to the left and look it for yourself and look at resistance levels and zones. Then you will get that idea of how much prices might be challenged when it reaches there for the USD ZAR. Okay, so as we go on like this, this is not a pair that I would look into trading freely and having a very comfortable feeling for it, because I'm just looking to the left and I can easily look into too many potential resistant area as well at this stage. Okay, so we have got prices, for example, in the past being driven all the way down from that opening body there, and then you've got a longest candle there. Okay, and as we go into the 4-hour chart and zoom out, you could see that you do have some resistance, but as we just find that it's not giving me clarity. Okay, it lacks the clarity at this moment of time. As you go on to 13.09, I would think that it's probably best to look at 13.20 and above for prices to go above 13.20, which is 0.20 is your psychological number, 20 and above to give you a better understanding of whether it can actually pick up the momentum to the upside. Okay, so that's a USD/JPY for you there, Michael. Let's look into Eugene's GBP USD, and perhaps you want to give me an idea of what the 61.8% you mentioned about, on where about would that actually be. on which time frame. So GBP USD, let's look into GBP USD at this moment of time, and let's look into that. Once you pull that one through, and just looking into that itself, giving you a very strong angle at 6 o'clock type angle for GBP USD. Okay, it found some very nice resistance there at that line there. So if I pull my A to B, let's say at some point here, okay, I would like to take that one there, or even that one, depends on at which stage of trade you are. Okay, let's say that hasn't all happened yet, and I'm looking at that potential there. Okay, so that's where I will have taken my profit for the sell area. Okay, so here you've got one there. Okay, and it's no harm you're looking into that too. Okay, but this one, it's more irrelevant because that's more like a spike that has happened within that move from C to D. Okay, so when you have then pull from A to B, that area that I have seen, that one there is your 50%. Okay, that's not a 61.8 on that one there. That's on the 1 hour chart. Let's check with Eugene again. When you pull the Fibonacci from the low to the high, now it depends why you are pulling it from the low to the high. It should be high to low if the trend is down. You need to pull your Fibonacci based on the trend. Okay, so if for me personally, if the trend is down, A, B, C, D down, and the trend is down, I pull from high to low. Okay, if my trend is up, okay, I pull from low to high. At this stage, GBP USD is giving me downtrend, so I'm supposed to be pulling from high to low, not from low to high. Okay, so let's clarify that one. Okay, on the bigger picture, as a long-term buy, I see. Okay, it does actually depend though. When you say bigger picture, it may actually follow your strategy, whereby for me the bigger picture is whether or not I find, let's say I'm trading ABCD like this, yeah, I would only see a buy going upwards if at all I have got a move like this, and that will be my M pattern, X, A, B, C, and then if I see that it reaches D, then I see the potential from D to go up to E would be a potential. But if I see only an ABCD like here, in this case, there's no M for me, then I wouldn't actually be looking into a buy at this stage, because I would only trade patterns, let's say, yeah, for me personally. So I would trade a buy if I have seen this ABCD being part of an M pattern, because that is a bullish pattern up. Okay, and I would look at it as well if it's a W-like pattern. Okay, so that's basically it. But we can look into a bigger time frame and look at perhaps there definitely maybe there is a potential. So here, for example, like what you've mentioned, I think I've got your point now. There may be a potential M-like pattern coming downwards. That's probably what you're trying to say. Okay, so let's see, is it possible, Eugene says, is it possible to zoom out a bit on the 4 hour? Okay, from 1985 to 12704, let's just check that first in the 4 hour. So this is probably what you're saying here, of a potential something like this, yeah? Something like that, I would guess. Yeah, so you got X here, A, B, C, let's say, and then potential D. Maybe that's what you meant. Now let's look into that a little bit on the GBP USD. Okay, I understand what you mean. Now it all depends, Eugene, as well, how clear is your ABCD first. Okay, your ABCD has to be quite clear. All right, now geometrically, if I because I don't really trade the M and the W so much, but it's more like a confirmation for me. Okay, but I tell you how I trade. I look at this one here as a seed of my geometric pattern, that X to A move up, because if you make that a square, okay, an exact square, and you do that, you will find the middle line to be where this could reverse to go upwards. Okay, so that's just an example, but let's simplify matters a little bit. let's zoom out. Okay, let's just, sorry about that. Okay, let's look into zooming in a little bit, not too much, like that. And what I would like to do is focus on the ABCD pattern. At this stage, my ABCD pattern is quite messy. The messier the ABCD, the more it wouldn't be clear for the M pattern. Okay, because the clearer the ABCD, the clearer would the M pattern be. Okay, at this stage, if I look into where would my A, B, C be, it's just a lot of mess, because you've got a lot of three o'clock angle here, you've got a lot of movement horizontally across all three lines, showing loads and loads of uncertainty. So yes, it may still happen, but let's say you are taking, we draw the ABCD first, for example, yeah? So if you want your A to be here, your B to be here, right? Then your C would be a higher point there. And then you are aiming downwards. Now, between B to C, I see that it's too broad. It's too broad. Usually if you've got A, B, C, it's nice if this is not too broad. Not too broad, not too much horizontal, because this will increase your risk. Then you will look into your M pattern behaving like this. You want, the nicer the M, the nicer your probability to reach your target. Okay, if not, you might find some risk along the way. Okay, so for me, if I want to measure my risk, I sometimes look at how nice that pattern is to the eye, but also clarity and orderly, how orderly that movement is. Here, the B to C is just too broad for me personally. Looking at geometry itself is just too broad. Okay, so let's say, for example, we clear this one out. Okay, for me, it's just not really worth the time to go into it drawing the ABCD that's not very nice already, because from the eye itself, the perspective of ABCD is not as clear and nice as other ABCD that you may find in other pairs. Other pairs, for example, the one that we have seen earlier on, USD CHF, was nicer and cleaner. The movement was cleaner, okay, and you can see it's driven by strong candles. You go into the 1 hour, you can see that the movement is nice, even though you've got smaller candles, but the movement is obedient. It's not hectic, it's not chaotic, okay, and it's not so broad, the B2C. So this gives you an example of a nicer pattern in comparison to the GBP USD that we have actually just seen. Okay, so if we go into the daily chart, let's say, and we want to look at whether we've got pattern there. Now again, it's not that clear at that end too. Okay, so here you may find that it's a little clearer here, maybe from X to A to B to C and then to D. Okay, so here maybe I'll look into the daily chart and find this one here. Okay, there. Okay, maybe a potential here, but when I've got a very broad B to C, I try to avoid that trade. But what I can then do is go onto your correlation table or find correlations to the GBP USD and trade the pairs that offers you better clarity. Okay, because this is basically it. Now here, I'm not saying that it's not a good pattern. It may be a nice ABCD right there, as you can see. Okay, but when you get very broad one like this, then it becomes an odd M pattern. You see, you understand what I mean? So sometimes to the eye it needs to be nice, it needs to be neat, in order, so that you get a nicer geometric shape. Because if I were to draw a geometric shape here, see, you've got it like this, for example. Okay, but overall it's just not giving me it looks nice. All these ones looks really nice, but I'm not really in favor of a broad B2C. You know, a B2C actually matters a lot to me. Okay, so there you go. Hope that's clear for you, Eugene. You know, that's. But again, I'm not saying that it wouldn't happen. You know, what you can then do from this stage. Let's say I'm using. Just be with you in a minute, Vincent. Okay. Once I draw that all the way x to a, you can always choose your 78.6 and your 61.8 as your potential reversal area, okay, and x to c as well, okay. So you've got a bit more room on the 61.8 right there, okay. So these are potential area, but it wouldn't be an M pattern that I like trading because of the distance or the broadness of the B2C. Okay, all right, let's see. Okay, Eugene, thank you. Now we'll move on, Vincent. Vincent has asked, can I use zigzag indicator in the MT4 to help as a guide to draw the CS pattern? Yes, you can. You can do that. I mean, zigzag would help you a lot. But more than the zigzag pattern, you want to use the Fibonacci levels, the Fibonacci ratios to really give you that edge in terms of how geometric that pattern is. The reason is the Fibonacci ratio or the Fibonacci tool acts like a ruler, you know, like a scale or a ruler, as though you are making a piece of furniture. You cannot make a piece of furniture without the proper tool to measure the angle and measure the width or the length. So the Fibonacci tool is exactly that. So the zigzag may help visually, but use the Fibonacci tool to help you more in the measurement, the exact measurement of the pattern. Okay, all right, there you go. So your GBP USD, hope that's clear for you, Eugene. All right, now we'll move on to to CAD JPY. Okay, we'll go on to the CAD JPY at this moment of time. Let's just go to that. CAD JPY, we'll move on to that. Now here on just at the first glance on a daily chart, it's just got some uncertainty. It's finding support at this moment of time on the daily chart, but it's moved into uncertainty on the daily chart. And you're also wanting to look at EuroCAD, so we're looking to CAD JPY first. It's the same on the 1 hour chart, and we've only got, it's just not a very nice timing wise in terms of the CAD JPY, because you're looking at the 1 hour chart and you are looking at loads of candles moving in within the three lines. It's not given a lot of it's got support and support, but it's not been well supported in a way because it's not gone above all three lines. Now what's happening with the shorter time frame? You've got all that move finding loads and loads of support at the moving averages, okay, giving you hints that there may be more biasness to the upside, okay, as opposed to the downside for the CAD, okay, JPY. So the 50 minutes, 15:30 as well, and the 1 hour is where it's picking up. So it's picking up and it got blocked at the 1 hour. It might need more strength. But look at the look at the price itself. Price action is telling you that it's trading at 85.50, too close to the 50. So it's 85.53 or so, but then we take it as a 50 side number. It needs to go above that. It needs to go above the 200 moving average to then give you, yes, it's finding support, to give you the hint that it's definitely giving more momentum to the upside. At this stage, a bit too early to decide. Need to look and pay attention to price, go above 85.60 and above to give you that assurance, a little bit of relief that that is where it's trying to go. At this stage, it's not giving you a clear direction, so you want to just take it back a little bit and wait, okay, for a clearer direction. All right, on the CAD JPY. Okay, brilliant. Okay, Vincent. So hope that's clear for you as well, Vincent, on the CAD JPY. On the 4 hour chart, it's just, again, it's finding the momentum, but it's got a lot of challenges there. Okay, from the 50, the 200, the 50, the 100, and 200 moving average. And then it's just not clear on the daily chart as well. And again, on the longer term, it's not clear too. So the CAD-JPY at this stage poses some risk to trade on the higher time frames. But perhaps you want to leave price to tell you whether it's trying to go up much more. So wait till price go above 85.50, like 85.60 and higher, to then give you a bit of a relief and knowing exactly what it's trying to do, okay, to go up or not. Okay, so here on the 30 minutes, for example, you need to be quite careful because there may actually be a potential A here, yes, B here, but let's look at price, whether price can actually push it higher. As it pushes higher, you may have a W-like pattern, so there may be a potential for a downward kind of move from C to D to the upside, but D to E to the downside. So you need to always look at prices going above B first, okay, going above B, above 85.60 and above, and then look left of where you've got potential risk for resistance as well. Okay, resistance zones, right? So you've got one right there, you've got some more right above, and then you've got another one right there, and that is close to the D area, right there. Okay, a potential W-like pattern, but C to D is moving to the upside potentially. But we need price to tell us more. Okay, let's move on to the next one, which is a Euro-CAD. Okay, so Euro-CAD, let me just clear up that. Vincent, I hope this is clear for you on the CAD-JPY. If you've got more questions, feel free to ask. We'll get to it. And but now I'll just move on very quickly, if you don't actually mind, to go on to the Euro-CAD. Okay, so we've got Euro-CAD right there, and here we've got, at a glance on the 30 minutes itself, lots of support that I can actually see. You've got support, it's trying to move out of the three lines, but it's just not moving out just yet. But again, support. So you've got some lowered momentum sentiment or bearishness by the Canadian dollar, but more momentum to the upside or bullishness by the euro, is what I can see here if you're combining euro and CAD. Okay, so in this stage here, you've got it touching the three lines again, but from the behavior of the candles itself finding support, even though it's on the way down now, but you can see that the three lines itself is supporting the upside type momentum, is pointing upwards. Okay, and as you go to the 4-hour chart, you can see that that's well driven to the upside as well. Now, daily chart, let's look at what's going on. This is where it's quite uncertain, and it's quite similar on the others, but then it's more biased to the downside on the very long term. As we build the brick and look into 5-minute chart, we can see it's under all three lines, and it's finding support from 15 minutes onwards. Okay, and then on the 1 hour, it's finding support. So what I can say is from 15 minutes right up to 1 hour, there may actually be a little bit of upward type momentum, but then it might then find some more room to the downside. Okay, because when you're looking at prices here, and then you've got prices concentrated up there, let's say on the 4-hour chart, prices stop there, look to the left, look to the left, look to the left, and more to the left. You can see that this whole area here poses as a support resistance zone. So you want to draw that zone, and you want to make sure that prices need to go above that zone to show you bullishness, and once it's under it, it's just giving you that biasness to the downside. But as it goes down, the challenges would be around this area here where the three lines resides. Okay, as you move on, you will see you've got support as well. So I think there is a bit of a trapped area or confusion area as well, that you can actually draw a very nice support resistance zone. Okay, so we can do that very quickly. You could look at this area here. Let's say you've got this one here. Okay, highest candle in that family. Okay, and then you can always draw that, let's say, okay, around there. Now, when we take that area where it's all concentrated, we take that low volume there, and we take again that area. So you can say that that's your confusion zone right there on the 4-hour chart. Okay, it's just trading in between. Now, when it is actually in that zone, going zigzag, 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 the longer it goes zigzag, the bigger the breakout will be. Whether to the upside or the downside, we don't really know as yet. Okay, at this moment of time, it's finding support and it's trying to go above. But if it does go above there, it might go up, find a little bit more support, and then continue to the upside. At this stage, too early to tell. It's just playing in within. So you've got a lot of range traders playing about euro, Canadian dollar to the sideways side of things. Okay, they are trading range. So they are taking little pips but trading into the range. Okay, from up coming down, from bottom going up, from up coming down. So that's what range trading means. Okay, so that's your EuroCAD, guys. Okay, Vincent. Hopefully that's clear. So we've covered USD ZAR, GBP USD, CAD JPY, EuroCAD, and the rest of it as well. So any more questions at all? If you guys are clear, I mean, if you've got no questions anymore, then we shall then end the session here for your Thursday live webinar, and then see you again on Monday. So any questions at all? It's not SMA, it's more EMA, Vincent. So the EMA, it's exponential moving average. So the moving average, you change it to exponential moving average, and it's 50, 100, and 200. 50, 100, and 200. Okay, I use it as a tool to help me understand the trend direction. I don't use it for entry or exit, but I use it to confirm trends. Okay. There you go. All right. Hope that's clear. Any other pairs that you would like to look at, guys? We're just looking to what's going on. Euro USD is just proving to be more to the downside there. On the 1 hour chart, at a glance, you may have a bit of a ABCD, really nice one happening right there all the way down. That's your nice C point as it meets and found resistance at the 50 moving average there. So there may be some more, a little bit more room to the downside. Okay, that's for your Euro USD on the 1 hour chart. Okay, but you want to always look into trend possibilities on higher time frames as well. Okay, so that's important. And apart from that, silver is still happening. There may be some room to go upwards at the 1870 over area, but not too much room. Might just find the resistance at that area there, but there may be a little bit more room, and that room may be just at the 1857 area perhaps. And once it does, then you are looking at more room to the downside to find support at the D area. Okay, that's for your silver. GBP. Okay, this is the one with the some more confusion area as well. It needs to go above 6197 for GBP AUD. Better still 6200, 6197, yes, 6200 and above to look into more bullish momentum for the GBP AUD. If not, then it remains to the downside. But again, it is playing in within the 3 EMA lines as well. Okay, so that's basically it. Euro CHF, that's how it's playing through at the moment. Okay, so I guess that's all I have for you guys. I hope that's been clear and that's been interesting for you guys today, and hope the trade ideas will prove to be beneficial for your happy pippingness. Okay, to happily pip, okay, your trades. So that's basically it. So if you guys have got no questions, I'm just leaving another 1 minute or so to see whether you guys have got any questions, anything that you would like to ask. If not, then we'll wrap it up here and see you guys again on Monday. Okay, if I don't see you guys before, then have a very good weekend. We are on Thursday, it's already the month of March, so things and months and days are passing by really fast. Okay, I enjoy that too. I've enjoyed that too, Eugene. I've enjoyed that too, everyone. So I would like to now thank you guys. A big thank you to you guys to have attended my webinar today, and hope to see you guys soon. For those of you guys who are in Malaysia, I will be visiting Malaysia, Kuala Lumpur and Penang, and very soon we'll be sending out the schedule on my training. So I'm conducting on behalf of FX Geometry and and Blackboard Trader, we are going to be setting up some workshops in Kuala Lumpur and in Penang. So in Penang will be a 2 days workshop. For you guys who are in Malaysia, from Malaysia, you can always pass the word around, and it's a free workshop in both places. Kuala Lumpur will be on the 20, I think it is, I'm not sure now, I think it is the 26th on a Sunday, and 1st and 2nd of April for the Penang one, okay? So if there's anything, you can always email me at kenny@fxgeometry.com, okay, guys? All right. Oh, Michael, yes, I think we have left something, have we? So GBP AUD on the 4-hour chart on the left, where did you put the SL stop out? Okay, good one. So we'll go on to the 1-hour chart for the GBP AUD very quickly before we end. GBP AUD, yes. Okay, now Michael, we have got a on the 1-hour chart, the stop loss, you have got two options, okay? One is you pull, let's say if we're looking at this example, A, B, C, D, and you're trading from C to D. Now, where would your stop loss be? Your stop loss would be 67% Fibonacci ratio of A to B. You pull your A to B, and then you look at your ratio of 67, okay? That will be my stop loss. That's option number one. Okay, option number two is you equalize your number of pips in profit with the number of pips in stop loss. Okay, so if you have got your profit potential number of pips is 80 pips, let's say, then from your entry level onwards, you take another 80 pips to go opposite the direction, and that is your stop loss. So that means you are doing your risk to reward ratio of 1 to 1. Okay, hope that is clear for you. This applies on all instruments for me, and on all instruments based on my pattern trading, I use only these two options, but my favorite is the 67% of the A to B leg of your ABCD pattern. Okay, so that's basically it for the stop loss, Michael. Hopefully that's clear. All right, brilliant. Okay, that's it for now. We've gone past time a little bit, but it's been always a pleasure to get more and more questions. For me, it's not a problem to even go 2 hours, but if you guys got more questions, feel free, you can send me an email to kenny@fxgeometry.com. We're very happy to help and answer your questions. So thank you again, once again, thank you very much for attending my webinar today. You guys have a good weekend, good week ahead, and we'll see you again. The next live webinar will be posted on the GTI Telegram group. If you guys are not already in the group, I will send that link to you, and you can always email me, and we'll just invite you to be part of the group, GTI Telegram group. Okay, guys, have a very good evening. Once again, bye-bye, and thank you.